Hey everybody, welcome back to Bitcoin and Markets. Today is going to be a rebroadcast of a pre-show that I do sometimes on Telegram. So before I go live, if there's something in the Telegram that I wanted to go over, we do that. So this is what this episode is. Make sure you check that out at t.me/Bitcoin and Markets. Also, like, comment, subscribe wherever you're watching this, listening to this. I do these podcast versions on all podcast apps, including Apple and Spotify and SoundCloud and everywhere. So check that out. Also, there will be a version on YouTube, and I don't think they get reposted to Rumble, but YouTube they do. So, all right, let's get into it. Hey, what's up, guys? Happy Friday. I'm going to put the link to a bunch of tweets that I'm going to be covering today. I'm going to put those in the comments for this stream. So today I really just wanted to talk about the ETF news. It'll be a short stream. What else? Good conversation going on the server. It's really awesome that there are people that come and participate, and we can have a little community. It's great. It does wonders for my mental health. Okay. Also, China's home prices dipped for a fourth month. I think we'll take a look at that article. That's going in there as well. What's up? Yeah, but not to YouTube yet. I'm just talking to my group on Telegram. Pre-show. My wife came in. All right. Yeah. Before we get going, so those are the stories I want to cover. I just sent that over. Pre-show, let's talk about this Breedlove comment, okay, that I posted a little while ago. So Breedlove, he's kind of, a pseudo philosopher type. I wouldn't even call him an economist. I would call him more of a philosopher, and he has good stuff, okay, and he's not a scammer at all. Just like gets to me sometimes when people continue to spout these things and they go down the path of having a false premise. So you guys know, if you're here, I am a little bit on the outs of mainstream Bitcoin thinking when it comes to inflation and deflation. I'm on the outs of mainstream macro thinking. The closest person to my way of thinking is Jeff Schneider. But there are a lot of others. Lacey Hunt is similar. He's a little bit more bookish, I guess, about it, where he knows the history of every single economic theory and economic calculation. He knows he's probably met those people in the past, but he is on the deflation side of the house as well. Jeff Schneider is much more aligned with my thinking. However, I don't think he sees this as a terminal type of problem for the existing system, where I see it as a terminal problem for the system. Even if there is some credit creation, aka inflation out there, it's not productive. It's not enough to get growth out of it. In the old days, back in the 70s, 80s, 90s, you would create credit, and for every dollar in credit, you would get like $3, $4, $5 in GDP, in productive activity out of that. Now we are at 1. I think Lacey Hunt says we're like 1.5, but I truly believe we're either at 1 or below. And so the more debt you add, you actually have a harder time paying it off. There is no growth left. There's no blood, or it's like getting blood out of a turnip. Is that the saying? You can't do it. So the more debt they add, yes, it is money printing. Yes, it is inflation. But all it will do is grind us lower. And that is the future of the global economy until the time of we change the system. We get out of the system. And there's a couple ways we can do that. We can do Jim Rickards had this for a long time, coming from the gold bug world. I think he's a little nutty now, but his one of his books back in the day, his most famous one, The Currency Wars, he said that they could revalue gold. Back at that time, gold was like maybe $500 an ounce. And if they revalued it to $10,000 an ounce, they would be creating money out of thin air. But then they back the dollars with that revalued gold. So they create the money that they need to pay off the debt. Bitcoin is similar. Bitcoin going up is actually inflationary, guys, because it's creating value. Like what happens when Bitcoin's market cap goes from $500 billion to $5 trillion? That money, a lot of that is going to be spent. That's $5 trillion now of value that didn't exist before. And it will be stimulus to the economy. So it is inflationary. It's not a one-to-one. Like for every dollar that comes into Bitcoin, you get a dollar of price appreciation in Bitcoin. It is exponentially bigger than that. And it differs by where the market is, because price is subjective. It's just a marginal price, the last price. So in a bear market, you can put $1 billion in and the price might still fall. In a bull market, you put $1 billion in and the price goes up, the market cap goes up 50 billion. So there's totally different market dynamics there. So putting 1 billion in and getting 50 billion of market cap appreciation, that's like printing 49 billion. There's going to be an inflationary effect, and it's going to be a stimulus in the Bitcoin economy. That's what a lot of people don't understand too. So Bitcoiners, depends what they want to spend that money on. Like the Cantillon effect, that value, that new value is going to go to the Bitcoin economy, the closest thing to Bitcoin. So El Salvador is going to benefit hugely from this. Lugano in Switzerland, anybody who's selling Bitcoin stuff, Bitcoin VC types, new businesses around Bitcoin, whether it's like a tax service and any sort of service around Bitcoin, is going to benefit immensely. Miners are going to benefit immensely from this because the stimulus, the inflation, is going directly into the Bitcoin economy because it is the Bitcoin market cap that is inflating. But I don't know how I got on that. I wanted to talk about money printing. So Robert Breedlove, we printed 6 trillion. Okay. Well, I don't think he knows what we is. I think that what he's saying is we is the government, because I think he's using government debt as being printed of money. But government doesn't print money. I mean, yes, they print bills and actual bills and coins, but the government debt is not a printing receipt, a receipt of printing. They borrowed that money from elsewhere in the economy. That money already existed. So we, if he's meaning government, the government debt, we is incorrect. Printed is incorrect. And 6 trillion. Well, there was some money printing during that time, but it was bank credit. But it's also, remember, I talked about a couple weeks ago, I talked about the, what did I call it? Where there's the repledging, the rehypothecation in the treasury market. All right. And there's a lot of that stuff going on. And there's a lot of cash and cash equivalents. There's rehypothecation in all assets too, not just treasuries, but in gold or whatever. And so we don't know. We could say that bank credit is a proxy for base money, but we don't know what the overall supply of money is. If we did, the Fed would just count it. And we wouldn't have to rely on a basket of goods with CPI. They would just report what the freaking money supply is. But they don't know because we can't count it. There has the last like 5 to 10 years, there has been some scholarship going on in this direction where people are trying to count the money. But you have to count like repledged collateral. You have to count bank credit of all types, not only bank deposits, but like, I don't know. It's just very, very complicated to do all these calculations to figure out, to estimate what the current money supply is. But there is scholarship going on right now. It's just going at a snail's pace. But anyway, so then Evil Spock, are you in here? Let me check the names that are in here. Is Evil Spock in here? Evil Spock is not in here, but he is our resident South American expert because he is a Brazilian. And we got into a little bit about what are they printing. So what is the Fed printing? The Fed is printing digital widget tokens. I don't know what to call them. I said maybe we could just call them ham sandwiches because then people would understand it's not dollars that they're printing. They're printing something completely inert, non-fungible with money out there in the economy. So QT and QE, they don't really matter either for the money supply. What they are trying to do is create balance, like correct the balance sheets of the economy. So the Bank of Japan in the 90s, when they went into their recession, the 30-year, 40-year recession or whatever, they thought at first it was a balance sheet recession, and they needed banks just needed to work through recouping the balance sheets, and they would come out of the problems. Well, that never happened, and so about 10, 15 years in, they said, well, we need to do it for them, so we're going to do QE, and that's where QE started. At least this modern incarnation of QE. And the thought process was that they're going to fix the balance sheets of these banks to make them look solvent and legally be solvent, and so that they will go out there and lend and boom the economy. That's the money printing. The banks printing in a loan. Now, that's a credit-based system. Okay, I understand in a sound money system where Bitcoin is backing the currency or whatever, that is different. But anyway, okay, that was a good good back and forth with Evil Spock. I love it when people chat. I love it when I'm like away for like 6 hours and I come back and there's like I don't know, 50 different posts because I love to see you guys chatting it up in there. But okay, let's go live. What was I going to talk about again? Okay, the ETF stuff. That's what I was going to talk about. And I'll go over the price chart as well. Let me take a look at that before we start. All right, guys, I have gone live on the other platforms. Just going to give it a second. That's going to do it for this one. Thank you for joining me. Ansel Lindner, BitcoinandMarkets.com. Check out the YouTube. Check out the Rumble. Check out the Telegram. You can follow me on Twitter at Ansel Lindner. And I appreciate everyone who supports me and is a member at the website. It helps me produce this content. So, all right, guys, like, comment, subscribe, and I'll see you on the next one. Bye.